You know, there's a revolution happening in mental health care right now, and it's being driven by psychedelic medicines. Today, we are diving deep into MindMed, a company right at the forefront of this massive shift. And we're going to figure out if this is a truly revolutionary investment or if it's just all hype. So check this out. Over the last 6 months, MindMed's stock has just surged. We're talking over 100%. And this is all thanks to some really positive clinical data and a much stronger financial position. Now, a run-up like this, it's impressive for sure, but for serious investors, it raises one very crucial question. Has the easy money already been made, or is this just the very beginning of a much, much bigger move? Well, that is the central question of this entire explainer. We're going to break down the data, all of it, from corporate presentations, SEC filings, and analyst reports to give you a definitive answer. To get there, we've got a clear 4-part plan. We'll start with the business itself. What's its competitive advantage? What are the key risks? Then we'll dig into the financial health. After that, we're looking at valuation and the future outlook. And finally, we'll deliver our verdict and see who else is in the running. Okay, so let's get right into the fundamentals. What does MindMed actually do? What gives them an edge? And maybe most importantly, what could go wrong here? In the world of investing, you'll hear the term Moat thrown around a lot. It's just a company's durable competitive advantage. For a clinical stage biotech like MindMed, that moat isn't a famous brand or some giant factory. It's the data. Everything, and I mean everything, comes down to the scientific evidence behind its lead drug, a compound called MM120. All right, I really want you to focus on this slide because this right here, this is the heart of the entire investment case for MindMed. We're looking at something called effect size. And don't worry, it's just a simple number that tells us how well a drug actually works. A higher number means a more powerful treatment. As you can see, MM120's effect size is a remarkable 0.81. Now, to put that into perspective, that is more than double the effectiveness of the current standard treatments. This isn't some small improvement, folks. This is a potential game changer for treating anxiety, and it's the single data point that has the entire medical community watching very, very closely. So all this powerful data is now being put to the test in late-stage or phase 3 trials. These are the final really large-scale human studies you have to do before you can even ask the FDA for approval. So MindMed's entire path to actually making money rests on 3 pillars: getting MM120 approved for both generalized anxiety disorder and major depressive disorder, and then moving its next-gen compound, MM402, forward for autism spectrum disorder. But let's be real, the path to approval is absolutely filled with risk. I mean, for a company with 0 revenue, a late-stage trial failure isn't just a setback, it can be a catastrophic event for the stock. Same goes for regulatory delays, but the most pressing threat right now is actually external. In a huge development, a competitor, Compass Pathways, announced it's speeding up its launch timeline by up to a full year. That puts immense pressure on MindMed to be the first to market. Okay, now let's switch gears and turn to the financials. This is where we see if the company's incredible scientific promise is actually backed up by a solid financial foundation. So here's the crucial thing to understand. MindMed is a clinical stage company. It doesn't have a product on the market yet. So what does that mean? Well, it means there's no revenue and there's no gross profit. This is totally normal for a company at this stage, but it means our analysis really has to zero in on financial stability and their cash runway. One of the key metrics for stability is the debt-to-equity ratio. It tells us if a company is relying too much on borrowed money. But the source documents we analyzed don't actually provide a specific number for this, so we're sticking strictly to the data we have in front of us. You know, the most important financial metric for a company like this is free cash flow. The easiest way to think about it is like your personal take-home pay. It's the cash a business has left after paying all its operating bills. When that number is negative, we call it cash burn. In the most recent quarter, MindMed reported a net loss of $67.3 million. That's the company's cash burn. It's the money it's spending on those super expensive but totally crucial phase 3 trials. Now, that's a big number, no doubt. But the good news here is that a recent financing round is expected to fund all their operations into 2028. That gives them a really solid runway to get their drug across the finish line. All right, now for the big question, what is this stock actually worth? In this section, we're going to bring together the science and the financials to look at what analysts are expecting and the major industry-wide risks that could honestly change everything. Well, Wall Street is definitely bullish. While our sources didn't specify a median or low target, the high price target from Jones Trading is a staggering $61 per share, I mean, that implies massive, massive potential upside from where we are today. And the reasoning behind that optimism is just as important as the number itself. Jones Trading notes that MindMed is perfectly positioned to capitalize on a major shift in medicine as the neuropsychiatry world becomes, and I quote, increasingly open to psychedelic-based therapies. This suggests a powerful tailwind for the entire industry. But that tailwind is glowing for everyone. The single biggest risk to MindMed's future is this fierce race to the market. Like we said, Compass is speeding up. And another competitor, a combined Atai and Beckley Psytech, just got the FDA's coveted breakthrough therapy designation for their drug. And that's a status that really helps speed up the review process. The first company to get its product approved will capture a massive first-mover advantage. So, we've covered the business, the finances, and the outlook. Now it's time to put it all together for our final verdict and, explore some other ways you could invest in this space. Based on our analysis of all the available data, our recommendation is a buy. Yes, the risks are significant, and yes, there's been a big run-up already, but we believe the potential reward from its best-in-class data simply outweighs the challenges ahead. And we're aligning our 12-month price target with the highest on the street. We recommend a buy with a 12-month target price of $61 per share. So if you want to boil it all down, here it is. The strongest reason to buy is that incredible, potentially best-in-class efficacy data. The biggest risk is that a competitor just gets to the finish line first. It's a classic risk-reward scenario. Now, for investors who are intrigued by this space but maybe a little wary of the risk, there are other options. Compass Pathways offers a potentially faster path to market, which you could see as a higher-speed play. Meanwhile, Atai/Beckley's drug, with that FDA breakthrough designation, could have a smoother ride with regulators, making it a potentially more de-risked investment. Each company really does present a unique profile. And that brings us to our final question for you. Based on everything we've talked about, which competitive advantage do you think matters most? Having the best clinical data, the fastest timeline to market, or the clearest regulatory path? Let us know what you think in the comments. We'll be back really soon with another explainer, breaking down the data behind the stories that are shaping our world. Make sure you subscribe so you don't miss our next deep dive.